All right, let's talk about tax brackets for 2021. Some things stayed the same, but we also saw a few changes in the brackets this year, and we'll be going over both in this video. Now, before we get too deep into it, I want to say welcome. I'm Karan from Life Accounting. Be sure to give this video a like so more people get the chance to see it, and consider subscribing to the channel. Okay, let's talk about the things that remain unchanged this year. The number of tax brackets did not change in 2021. There are still a total of 7 tax brackets. The tax rates themselves also remain the same in 2021. There are still 7 tax rates: 10%, 12%, 22%, 24%, 32%, 35%, and 37%. So Karan, what did change? You know what? I'm glad you asked. The biggest change to the 2021 tax brackets was the brackets themselves. The tax brackets increased across all brackets and all filing statuses this year. Now, a quick note on tax brackets. Tax brackets are adjusted annually to reflect changes in the cost of living, also known as inflation. Now, because inflation in the US normally rises, we typically see the tax brackets rise as well, year over year. Now, compared to 2020, in 2021, we saw a tax bracket increase anywhere between 0.71% to 1%, with an average increase of 1%. All right, enough about percentages. I'll go ahead and place some timestamps in the bottom of this video so you can skip to your specific filing status if you like. And if you have any specific questions, be sure to reach out to your tax advisor. Here we go. If your filing status is single, meaning you are unmarried, divorced, a registered domestic partner, or legally separated, here are your 2021 tax brackets. All right, so we see here that the first $9,950 in taxable income will be taxed at 10%. That is an increase of about $75 when compared to 2020. Next, income between $9,951 and $40,525 will be taxed at 12%, which is a $400 increase when compared to 2020. Then income between $40,526 and $86,375 will be taxed at 22%, which is an increase of $850. Then any income between $86,376 and $164,925 will be taxed at 24%. And we see that as an increase of $1,625. Any income between $164,926 and $209,425 will be taxed at 32%, which is an increase of $2,075 when compared to 2020. Then any income between $209,426 and $523,600 will be taxed at 35%, which is an increase of about $5,200 compared to 2020. All right, any income after that, $523,601 or more, will be taxed at 37%. Okay, if your filing status is married filing jointly, meaning you are married by the end of the tax year and want to file your tax return jointly with your spouse, here are your 2021 taxable income brackets. So the first $19,900 will be taxed at 10%, which is the increase of $150 when compared to 2020. Next, any income between $19,901 and $81,050 will be taxed at 12%, which we see is an increase of $800 compared to 2020. Next, income between $81,051 and $172,750 is taxed at 22%, which is an increase of $1,700 compared to 2020. Next, any income between $172,751 and $329,850 will be taxed at 24%, which is an increase of $3,250 compared to 2020. Next, any income between $329,851 and $418,850 will be taxed at 32%, which is an increase of $4,150 when compared to 2020. Then we have any income between $418,851 and $628,300 will be taxed at 35%, which is a big increase. We see an increase of $10,400 when compared to 2020. Then after that, any income you make, $628,301 or more, will be taxed at 37%. If your filing status is married, filing separately, meaning you are married but choose to file your return separately from your spouse, your 2021 taxable income brackets will mirror that of a single filer. So the first $9,950 will be taxed at 10%, which is an increase of $75 compared to 2020. Any income after that between $9,951 to $40,525,000 will be taxed at 12%, which is a $400 increase when compared to 2020. Next, any income you have between $40,526 and $86,375,000 will be taxed at 22%, which is an $850 increase compared to 2020. Next, any income you have between $86,376 and $164,925,000 will be taxed at 24%, which is an increase of $1,625 compared to 2020. Then, any income you have between $164,926,000 and $209,425 will be taxed at 32%, which is an increase of $2,075 compared to 2020. Then, any income between $209,426 and $314,150 will be taxed at 35%, which is an increase of $5,200 when compared to 2020. And lastly, any income you make over $314,151 will be taxed at 37%. Now, if your filing status is head of household, meaning you are single or unmarried and pay at least 50% of the cost to support your household and live with a qualifying family member who you supported for more than half of the year, here are your 2021 taxable income brackets. The first $14,200 you make will be taxed at 10%, which is a $100 increase compared to 2020. Next, any income between $14,201 and $54,200 will be taxed at 12%, which is an increase of $500 when compared to 2020. Next, all income between $54,201 and $86,350 will be taxed at 22%, which we see as an $850 increase when compared to 2020. Then, any income you make between $86,351 and $164,900 will be taxed at 24%, which is an increase of $1,600 when compared to 2020. Next, any income you make between $164,901 and $209,400 will be taxed at 32%, which is an increase of $2,050 compared to 2020. And after that, any income between $209,401 and $523,600 will be taxed at 35%, which is an increase of $5,200 when compared to 2020. Lastly, any income you make, $523,601 or more, will be taxed at 37%. Now that we know the changes for tax brackets in 2021, let's look at how tax brackets actually work. Here's what we know so far. We know that there are 7 tax rates and 7 tax brackets. Now, here are a few other things you should know about tax brackets. Number 1, the United States tax rates are both progressive and marginal. Progressive meaning the tax rate rises as your income rises, and marginal meaning each tax rate applies to a portion of the income within a tax bracket. Let's look at an example. Say you are single and have a taxable income of $50,000 in the year 2021. You'd pay 10% on the first $9,875 of your income, and then 12% on the portion of income between $9,876 and $40,125. Then you'd pay a 22% on the remaining portion between $40,126 and $50,000. So in total, you'd pay close to $6,800 in taxes on $50,000 of taxable income. Which brings me to the second thing to understand about tax brackets. And it's that tax brackets and tax rates apply to your ordinary income. It's true, the tax brackets we went over today do not apply to all of your income. You see, the tax brackets only apply to your taxable income, and taxable income is your total ordinary income minus any credits and deductions that you take. So ordinary income includes things like wages, rental income, loan interest, and investments held shorter than a year. Speaking of investments, don't confuse capital gains tax rates with the tax rates we went over today. And that's because capital gains from investments held longer than a year are taxed at a separate long-term capital gains tax rate that are often much lower than the tax rates for normal income. And the third thing I want you to know is that states have separate tax tables. You see, the tax brackets we looked at today were federal tax brackets and tax rates. Now, the state you live in will have its own specific tax bracket table similar to the ones mentioned today, unless you live in a non-income tax state. Well, YouTube family, there you have it. Tax brackets for 2021. I hope you found this video useful and interesting. If you did, please go ahead and like this video and comment below if I did a good job of explaining. Also, don't forget to subscribe to our channel so you don't miss out on other videos we're putting out to help you lower your tax liability. I'm Karan from Life Accounting. Until next time.